Recording in progress.
Good evening, everyone. I want to welcome you all again to Tax Resolution Help Center. My name is May. I will be hosting tonight's session and introducing today's speaker. I will also be coordinating the Q&A chat session in the end of this session. I want to congratulate all of you for taking steps to deal with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax, represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you are entitled to live a happier, healthier life by keeping more of what you earn and getting the tax man off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. The presentation will last about 20 minutes plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The, op- the information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. And of course, to better understand what might be on your mind during the session, I might include some polling questions to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, this session will be recorded. The topic for tonight's session is truckers, trades, and blue collar. 5 tips to minimize tax expense. And the tax expert for today's session is Jared Smith. Jared has been a CPA for close to 20 years, where his experience spans state and local governments, nonprofits, individuals, and small businesses by providing accounting, budgeting, financial, IT, management, pension, tax, and other services. While he believes taxes are important for our government to function and provide the needed services it does not believe we should be paying 1 cent more than is required and enjoy helping his clients find ways to optimize their tax situation. With that said, introducing Jared Smith.
Thank you, May. Pleasure to be with everybody again tonight. I don't know if anybody's a repeat customer from previous weeks, but grateful to have you back if you are. So one of the first things we need to understand when we're self-employed is the additional tax, I'd like to say, that we may not be familiar with. When we're W-2 employees, we know that we have 7.65% of our paycheck taken out for Social Security and Medicare. We also have federal taxes and state taxes taken out. But being self-employed, or let me back up, in addition to that 7.65 that we have taken out of our paycheck, the employer also contributes 7.65 on our behalf to the IRS for a total of 15.3%. Being self-employed, we are considered both the employee and the employer, and therefore we need to pay that 15.3%. But the challenge that I have seen in people who are starting out on their own is not planning for that. These deductions or these tax payments are not automatically deducted unless you have some type of payroll system set up because you've elected to be taxed as an S corp, and you have a payroll process set up to pay for that. on a regular basis. So it's something we need to pay attention to. And then you have your ordinary income tax. So your net earnings of your business are added to your ordinary income. If you have a W-2 job, or your spouse or significant other, well, I guess you can only file with a spouse. So with your other income, your capital gains, all that's added in, and then the tax tables are applied to it. If you do happen to have a loss, which we typically do in the beginning stages of our businesses, you can deduct your ordinary, those losses can offset your other ordinary income. So that does help you in that regard. You also, being self-employed, you get to deduct 1/2 of your self-employment tax from income. And if your business is qualified, and most of them are, you get to deduct 20% of your net self-employment earnings from income, which is set to expire with tax year 2025. That was part of the Tax Cuts and Jobs Act. And again, your tax liability, being self-employed, should be estimated and paid quarterly. Now, if you have a W-2 job, maybe would increase withholdings there, but if you pay quarterly, the government wants you to pay throughout the year. They don't necessarily just want you to pay at the end of the year. They want you to pay that at the end of the year, but they want it throughout the year because they need the cash flow, obviously, to run their government's funding programs. So the purpose of this presentation is to make sure that you are taking advantage of all the expenses that you have running your business, so that you can, so you're not taxed on more than what you need. I don't advocate going out and spending money on expenses if you don't need. I had a client tell me that her accountant told her she can go out and buy a trailer and it'll decrease her expenses. And I said, well, it'll decrease her taxes because she can expense it off. And I said, well, do you need the trailer? You're spending what you're spending on, the money you're spending on your trailer that you may not need doesn't really help you if you don't need it. You're spending money on something you don't need. So my goal is to help you take advantage of the expenses that you have to pay and make sure that you're getting all the deductions that you're entitled to. You start up a business. There's always there's a period of time that you spend getting ready to hang out your shingle, so to speak. You can have these upfront investments with market research and analysis, trying to figure out where you want to set up shop, whether it's going to be a storefront somewhere, or if you want to focus on a certain geographical area and have a radius of how far you want to be able to service your customers. You can hire people to help you do that research and provide some guidance to you. If you have an office space that you need to furnish, you can have capital purchases of furniture tools and equipment. If you need to legally form your entity, whether it's an LLC or a partnership or an S corp, you're going to be engaging attorneys and other professionals to help you set that up. If you need to hire and train staff, and then other rental costs that you may have, you don't purchase things outright. Some of these costs may be depreciated or amortized. A lot of the things the IRS wants us to depreciate, the high cost things that we spend money on, assets that we spend money on, expense them over time. That's what depreciation is, an asset that is expensed over time. And there are certain bonus depreciations. You can expense a chunk of it up front. 2022 was the last year you could expense 100% in 1 year based on certain rules. But you can expense it. And it goes down from there in the following years, 80, 60, 40. Amortization is the cost of non-tangible assets over a period of time. And the IRS doesn't necessarily like us to fully expense certain things. They figure the cost that you put in to start your business before your business actually went into business, they want you to amortize those startup costs. Then when you do have established, you're going to have these ongoing costs. And I think a lot of this is obvious to people, but you'd be surprised people that don't even think about things. I have a relatively new client. This is the second year I'll be helping this person, and I was really surprised at things that were not provided to me in order to expense. So make sure you got your rent, you got your utility bills, anything, internet service, phone bills, office supplies, printing costs, anything that you do to run your office. Those are expenses, and you can deduct them. If it's taken away from your income, then you do not want to be taxed on. Then it needs to be taken away from your taxable income too. So just think about that. Whatever you're spending money on that takes away from your profits, you should expense those so you're not being taxed more on the income that you didn't really have. Certifications, education, a lot of people don't recognize these types of expenses also. If you're in a trade, an industry that requires licenses, certifications for those, expenses for those, then you can deduct them. If you are in a trade school that is eligible for federal funding and you're kind of maybe starting out now while you're still in school, maybe trying to increase your education, you have possible credits that are available for you, the American Opportunity Credit and the Lifetime Learning Credit. You know, those acronyms can stand for other things, but they're for education credits that could be available to you. Membership fees to trade union organizations, anything you do to promote yourself, to network, and to expand your business, those things can be expensed. Subscriptions to trade magazines, those can also be considered education type expenses. Advertising, client service costs, registration for attending conferences, trade shows, travel, the expenses you have to travel to those places, dining and entertainment. In 2022, you could expense 100% of your dining and entertainment if they were within a restaurant, and that was to help those struggling from the pandemic, the effects of the pandemic, to get people out to restaurants more. That you're able to deduct 100% of the tax year 2022. Now it's about it's less than that. Excuse me. 50%, and you need to keep track of who you had your meeting with and the purpose. Excuse me, apologize. You have gifts that you gift your clients, or gifts that you send when you're at these trade shows. Those can make sense. Banking, credit card processing fees. I have if you take a loan out, the interest that you would pay on your loan is deductible, not the loan itself, not the principal payments. Your tax return, the money you spend, you pay to an accountant. If you have an office in your house, your home office, you can take a percentage of the costs the cost to run your house, your home. For example, if your home office represents 5% of the square footage of your home, you can deduct 5% of these expenses. uniforms, mileage, vehicle costs. Rule of the day is, as I've alluded to, if you spend money to make money, it's most likely deductible expense. So keep accurate records and use software to make it easy. I'm going to turn the time over to May and mute myself for a minute while I'm coughing. Apologize.
Yes, please, you can. You can actually drink water, Jared, if you need to.
Anyway, right here.
Mhm. Okay. All right. Well, thank you very much for that, Jared. So we do have a question here. This is from. Hold on. Let's see. 1 second. This is from where? Where is it? Hold on. Let me just check. Okay, there you go. Quite loading. Give me one moment. Apologize for that. So let me go to our Facebook live audience first. So the question is, since we can deduct all the expenses or things that are actually starting in a business. Okay, so the question is there a limit how much you can expense in your tax return?
No, there's not. You can have, I mean, it obviously has to be legitimate. And because you're a Schedule C, that's what your business income and expenses. I had a client who it was the first year that was actually a farm Schedule F, so it was a farm type of farm business. They bought a truck and they had almost $100,000 expense. They fully depreciated their truck that lasted in 2021. And so they took $100,000. They didn't have any income, and so they had $100,000 expense that offset their other income. They had a few $100,000 of total income that they had, so they offset it by that. So there is no limit. It just needs to be legitimate. Now the concern that you need to remember is if there are multiple years that you're not making a profit, the IRS is gonna question that. And because people will set up businesses and do what they can to avoid having to pay taxes. But if it's not a legitimate business, it'll come back and bite you. There are people that sometimes treat hobbies like businesses. There's hobby rules, hobby loss rules that you need to be aware of. But to answer your question, there's no limit on how much you can legitimately expense from a legitimate business
Mhm.
pursuit.
Okay, that's good to know. I guess the follow-up question on that is, how are they going to prove that this is a legitimate uh, business?
Documentation. I mean, if you're formed, if you actually have a business that's legally formed with your state as an LLC, you got to be able to show um, that maybe you have paperwork, you have clients, you have income. That's a just because you have income, and I mean just because you have losses doesn't mean that you're not a business. But if you show income that it's coming in regularly, that you have continue to have losses that offset that income, then the question is that a viable business too? If you're not making a profit, but the IRS is going to ask for anything. Do you have bank statements? Do you have income? You want to show some income too, and not just have losses that offset your other income.
Mm, I see.
If you have a legitimate business, you won't have any difficulty proving that you do.
Proving. Mm, okay, got it. Well, thank you for that, Jared. So, um, the next question, this is because I need to check it again because my peer is loading. But the question, this is from one of our attendees in uh, Zoom. This is from Carlos. How many percent can I deduct of my losses? Is there a bracket maybe? It's a question.
Oh, what percentage of his losses can you deduct?
Hmm. I guess that's a question.
Well, I mean, if you have your losses, you can deduct all your losses up to the amount of your income. I mean, if you go beyond your income and you have a negative income, then it's a net operating loss carry forward.
Mhm.
I mean, you're not gonna get any refund from the IRS because you have business losses. But you can't, whatever you use to offset all your income, the leftover, the excess can be carried over to to future years.
Okay, that's great to know then. Well, that's actually the last question of our session. Um, what can you actually advise right now? Since mostly, whenever it is a tax season, I noticed that this has always been an issue with most of those people is self-employed or those actually working in a company, individuals. What do you think that they can do to make sure that they don't miss paying their taxes?
Will miss paying their taxes, I mean, on the quarterly
Yes,
basis,
quarterly basis. Mhm.
you just set yourself a reminder. I mean, if you have if you have a calendaring system that works for you, set yourself a reminder of a couple weeks prior to each quarterly deadline. That's really the only,
Mm.
and or you can hire, if you hire an accountant, have him be tasked with that reminder.
Mm.
But set aside 20% of your income. Anytime you get payment, put 20% of it into a separate account, or at least account of, if you have books that you keep, put those aside. So you're not spending the money that you need to pay for taxes.
Mm. So it is very important that they have to save as much as possible for backup, just in case this happens.
Yeah. But you don't, if you save, set aside more than you need to pay in taxes, you just have that saved. You use it for future years, or you just don't pay that much and you don't know that it's still available to you. But it's important to plan for those taxes.
So the basic rule now is that to make sure that you plan for your taxes.
Yes.
That's a year of planning.
Yeah. Quarterly, you want to be able to project and plan for what you might owe throughout the year as best as you can, and
Mhm.
then be prepared.
I just have a question, Jared. I'm just curious. What are the most common reason why most of the people have issues when it comes to paying their tax?
No one wants to pay taxes, me included. I mean, we have to, but we put it off because you don't want to part with that money, and you think that the future will be better, and you'll have money coming in, and you'll pay it later. It's just a natural human tendency to not want to do something that is um, that isn't fun to do. No one likes to pay taxes, but the people that hate having that hanging over their head will pay their taxes a lot sooner because the feeling of it hanging over their head is greater than the loss of that money. So,
I see. Okay. Well, yes. So most likely, they even though if it's not something that you don't want, especially if you are working hard for that to earn the money, then basically we are still obliged to pay to government.
yeah.
Okay. All right then. Anything else that you want to add? That's the last question that we have for tonight's session. Well,
Appreciate the time. Appreciate your attending tonight, and
Yeah.
they use software and use electronic, use your cards and have the software keep track of it for you. Don't don't use cash if you can avoid it, or just because then you may not keep track of it very well.
Ooh, okay. Now I know. Because if I base it, other people, they are comfortable using card because of transaction history that they can track. But if they do use cash, they need to keep the receipt. Is that
Yeah,
right?
keep the receipts. You keep the receipts for everything, even though your bank statements will have the transactions on there. It doesn't have, may not have as much detail as you need. It's your desire though.
Depends on that, which is more comfortable to you or whatever works to
Yeah,
individual.
whatever works.
All right. Well, Jared, thank you again for tonight. I really appreciate you spending with us time even after work, and it's already late, I know. And thank you also for all again sharing your knowledge, helping us out on how to figure out how to actually help us in getting the taxes, tax return file, and to avoid fees and interest more and with our taxes. Truly appreciate that.
Thank you.
All right. Well, have a good night.
You too.
Okay, thank you. All right, and everyone, I want to thank you for spending your night with us, staying up and listening to our session. Again, we appreciate you listening to our sessions, and our goal is to help you remove or reduce your taxes and increase your wealth. And we do this with the TriTax method of DIY, do it yourself, DIT, do it together, and DIA, do it all. Three methods, one solution to reduce your stress from no IRS or state tax debt and a happier, healthier life. If you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. And since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you need help, we have a team of experts who can do your tax return for you. And again, please check our website at taxresolutionhelpcenter.com and please join us as a member today for only $19.95 per month. And again, thank you all for attending. We'll see you again next week. Have a good night.